What is up? It is Big Chart Trades back with another video, and in this video I am going to be walking you guys through SMT. Now this is going to be a complete backtesting session on SMT because I've been getting tons and tons of questions about what SMT is, how to find it, how to trade it, and I thought what better way to show you SMT than by doing a full backtesting session. So if you haven't watched my other SMT explained video, I will pin it right here so you can go watch that. But I made that a while ago. It has everything you need to learn, but you know, it is important to see while backtesting how SMT works, how to trade it, etc., etc. And by the end of this video, you're going to have a complete understanding of SMT so you can go take this and use it in your trading every single day. So I want to just show you guys the trade that I took today. Because there was SMT involved at this high, and I think it's important to show you guys how it helped me find my trade. So first of all, as you can see on ES, right, ES pulled into this 15-minute fair value gap, right? And there was absolutely no fair value gap on NQ, right? Oh, I guess there was like a really, really small fair value gap right here. Right, like tiny fair value gap. Let me just pull that out for you. Wait, sorry, really small. It's small. I didn't even see this when I was trading today. But yeah, so there's this really small fair value gap, and you see, this is ES, right? This is NQ. So let me describe what SMT is. SMT is an imbalance between two correlated assets, right? Since I trade the NASDAQ, the correlated asset for the NASDAQ is the S&P 500. Now you can also use the Dow, but I just prefer the S&P 500. So every time I trade, every single trading day, I have ES pulled up right here next to me, just like this while I'm trading, because it's always important to look for SMT because SMT will give you a good idea of where price is going. So there are two different types of SMT. There's internal SMT and external SMT. So external SMT would be at like these lows or something, right? Or these highs, right? Which is what we had today, which I'll show you, right? Internal SMT is on the 1 minute time frame when you are looking for an entry, like let's say NQ made a lower high than this, right? This would be internal SMT. Why would it be internal SMT? Because it's on the 1 minute time frame. So for example, as you can see, this is the same candle on both the ES and the NASDAQ, right? This 10 a.m. candle, okay? So where's the difference here? As you can see, this is the same candle, the same fair value gap. What did ES do? ES pulled into this fair value gap right here. And since ES pulled into this fair value gap and NQ didn't, that is SMT. Now, we also have this SMT right here. As you can see, the NASDAQ made a lower high while the ES made a higher high. That is bearish SMT. Why is it bearish SMT? Because it's at the top of the range, right? SMT at the top of candlesticks, the top wicks, that is bearish SMT. SMT at the bottom wicks, that's bullish SMT, right? So as you can see, we also have this PD array that the NASDAQ never pulled into. So Charlie, how did you take the trade on the NASDAQ then, right? How did you do that? Well, since these are two correlated assets, since ES pulled into that fair value gap, I went ahead and I did this, right? ES pulled into this gap right here. Okay, this is the 15-minute gap. Okay, and I looked for a change in state of delivery on the NASDAQ since ES pulled into that fair value gap. You see how I'm leveraging SMT to get an entry. So what happened, right? Change in state of delivery is a candle closure below the series of up close candles that swept highs. Obviously, these were highs, right? What happened? They got ran through by these up close candles. So a closure below these candlesticks would be a change in state. Okay, so if I were to take this trade on ES, change in state would be right here. Same thing. Okay, but why am I trading the NASDAQ instead of ES? I prefer the NASDAQ. It moves faster and I like it way better. I don't trade ES. Okay, ES is move slow. It's kind of boring, whatever. So what happens? I take this entry right here. I go short. Let's just go in with 1,000, go short. And then what do I target? Well, I know this video is about SMT. I'm just showing you the trade. So I would first target this open. Why would I target this open? If you know how I trade, you know that I trade the 4-hour PO3. There's no bottom wick here. So I want price to put in a bottom wick. So my first TP would be 4-hour open. And then my final TP would be these lows right here to put in that bottom wick. It just rests in liquidity. So what happened? As you can see, we take out those lows. I actually moved my stop here in profit. This was my stop. And then I got stopped in profit on my eval, one of my evals. And then on my 2 alpha fundeds, I got, I hit the final TP. So as you can see, took my stop, went up, and then ended up taking my final TP right here. So that was a 1.95 hour trade or something. But you can see how I used SMT to frame this entire trade. Now, let me go back. Let me find some more SMT. Okay. Let's do this. Let's go to the daily time frame. And I want you guys to look for something. Look at something. Okay. And look how important SMT is. So, as you can see, this is the daily time frame for ES, and this is the daily time frame for the NASDAQ. I want to ask you what you see here. Let's select this bar. What do you see here? You see this external bullish SMT. You see that on the NASDAQ, on the daily time frame, we made a lower low, while on ES, on the daily time frame, we made a higher low. That is SMT. And there is no coincidence that at the same time that this SMT is happening, we are pulling into this daily gap right here. So since we have this bullish SMT, we pulled into this daily gap on the NASDAQ, we can expect a move to internal range liquidity. Why? Because we took this external low. Now we're trading out of that low, right? So we took external price only moves from external range liquidity to internal range liquidity, and from internal range liquidity to external range liquidity. So what can we anticipate? We can anticipate price to trade into internal range liquidity. I am targeting this gap right here. Why am I targeting this gap? Well, because if we take the 50% fib from the top of the range, if we take the 50% fib from the top of the range to the bottom of this range, oh my God. Top of the range to the bottom of this range. What do we see? We see that we have this internal range liquidity in premium. Price only moves from, if price is in discount, price is always looking to move to premium. And if price is in premium, price is always moving. That's a whole different lesson. I don't have to get into that right now. But basically, this is my target. I am bullish. So, well, Charlie, this video is about SMT. It is about SMT. So I'm going to stop talking about whatever bullshit I'm talking about right now. Okay, so let's find some more SMT examples. Let's go on the 4-hour time frame. Let's look at a setup that looks good. This 2 p.m. candle right here. Pretty sure I traded this. Okay, so we see that we just inversed this 4-hour fair value gap. So I'm obviously bearish. Why am I bearish? Because we just inversed this 4-hour fair value gap. Okay, target would be this low. So let's drop to the 15-minute and look for any PD rays that we can use when this 2 p.m. candle opens. All right, let's look for PD rays that this can manipulate into. So first, I see this 15-minute gap right here. Let me drop down to the 15-minute on ES. So we already have some bearish SMT going into this 2 p.m. open. Well, Charlie, where's that bearish SMT? Right here. Look. The NASDAQ made this equal high. Sorry. The NASDAQ made this equal high, while ES made a lower high. Okay, so let's see what happens. 2 p.m. opens. Let me drop down to the 1 minute time frame. Let's find some more SMT. Okay, whenever I am looking for SMT, I usually start on the higher time frames, and then I look for it when I enter trades. Why do I look for it when I enter trades? Because if you know how I trade, you know that there are 3 confluences on the lower time frame that I am looking for. I'm looking for a liquidity sweep. I'm looking for SMT, right? And then I'm looking for a change in state of delivery. Okay, so what do we want to see here? Well, I want to see the NASDAQ take out this buy side liquidity and trade into this 15-minute gap. Why am I on the 1 minute time frame? Because a 15-minute PD ray is a 1 minute execution. Okay, 15-minute PD ray is a 1 minute execution. An hourly PD ray is a 5 minute execution. Okay, these are important things to keep note of. All right, so let's see what happens. Is 2 p.m. candle opens up. We immediately sweep that liquidity, trade into this 15-minute gap. And what do you see here? Well, look at all of this SMT. Look at this new high that the NASDAQ made, right? Do we see that it was made on ES? It wasn't. It wasn't made on ES. As you can see, the same candles, those candles didn't sweep that high. So this would be bearish SMT since it's at the highs. Okay, so let's see what happens. Change in state would be right here. All right. We're in this gap. This is an A++ setup. Okay, we sweep the highs again. All right. So yeah, this actually just disregarded that SMT at first glance. But at second glance, why is there still SMT here? What do you notice? I want you to answer this question. What do you notice about why is there still SMT here? I want you to answer it before I tell you to answer. Okay, now I want to tell you to answer. ES never pulled into this 15-minute gap. It never did. So sometimes in my Twitter posts, you'll see that like when there's SMT, I'll put it like this, right? Why do I put it like this? Well, if you use your eyes, you can see that the NASDAQ is well into this 15-minute gap. The ES is not at all in this 15-minute gap. So what am I looking for? I'm looking for a candle closure under this change in state level. Okay, so that is the candle closure right here. Okay, so this is the candle that changed the state of delivery. You see we have the liquidity sweep. We have the SMT inside of this gap. We have the change in state of delivery. This is an A+ setup. So what would I do? I would go short here. And my target, well, my stop would go at this high. Let me just move this over here. My stop would go at this high. Obviously, this is a 53-point stop, so I'd probably go into this with micros because we're only risking $500 to $800 per trade. And this is a 1.65R trade. So let's see what happens. We would get stopped out. Bad PA. Okay, we still have SMT because look how deep we are in this gap. So we would have gotten stopped out. And then what I would have done, since we still have that SMT, we still have all this stuff, is that I would have gone ahead and tried this trade again. This is the new change in state level. Why would I have tried this trade again? Because we still have all the confluences necessary. See, I would have taken that first trade with micros, like I said, since it was a large range, and I would take this trade with micros as well. See what happens. We get that change in state. I will go short again, target the same lows. Okay. Target these lows. Let's see what happens. We've gone ahead and took that stop, take profit. And as you can see, the 4-hour candle turned red. See how it was an open, high, low, close look. I want you guys to see that again. All right. This was the open. Okay, why am I bearish? I'm bearish because we just inversed this 4-hour gap that I showed you earlier. Right? We inversed this 4-hour fair value gap right here on this candlestick right here. So since I'm bearish, we know that all bearish candles open, manipulate higher, distribute lower, and then close, right? That's a bearish candle. So we opened, made a new high right here. Nope. Right there. That's the new high with the SMT, change in state of delivery, and then we go ahead and make this candle red. So open, high, low, close. You see? But you can see how important SMT is and why it matters so much, right? You see that it literally is a crucial step in an entry. It is extremely important. If there's no SMT, there's no entry. Okay, so let me find another example. Let's do this again. Okay, this is going to be the last example. Let's do. I want to do an easy candle so you guys see SMT pretty easily. Okay, let's do this candle. This is a 10 a.m. candle. Okay, so what do I see? I see this 4-hour gap. I'm not going to do the whole daily bias thing, but I'm bearish because of this gap. Okay, drop to the 15-minute. Okay, what am I looking for? I'm looking for PD raise above price since I'm bearish because I want open, high, low, close, right? So let's see what we have. Do we have any PD raise? We have this huge fair value gap right here. We also have one here that I want to use because obviously with hindsight, I know that this is the one I got tapped into. Let me just drag this out. Sorry, guys. Wow, this is frustrating. There we go. Okay. So we have this fair value gap right here. All right. Let me drop to the 1 minute. Oh my God, are you kidding? Can't drop to the 1 minute. Okay. Well, let me find a different example then, since I can't drop to the 1 minute with this setup. 4-hour time frame. Okay. Let's go to let me do a bullish candle for you guys. Okay. Let's go right here. This is a 10 a.m. candle as well. Okay. Boom. So I'm bullish. Why am I bullish? Because we have this 4-hour gap. Okay, and we have to fill this new weekly opening. Yeah, this new weekly opening gap. So we have to fill that gap. So I'm bullish. All right. So what do? I drop to the 15-minute and I look for PD raise where price can manipulate into. All right. Let's see. What do we have? We have this fair value gap right here. Now, before I even look at this gap, there's already bullish SMT. Why is there already bullish SMT? Because look at ES, what has happened? Okay, price has already mitigated this gap like several times. All right. So since I'm bullish, I want price to open, manipulate lower, trade higher, and then close. Right? That's a bullish candle. So what am I doing? I'm on a 15-minute time frame. We already have all of this SMT down here. Why do we have this SMT? Well, because of what I just said. You can see that we already mitigated this gap several times on ES. So let me drop to the 1 minute and let's get an entry. Let me drop to the 1 minute as well. I'm sure we'll have SMT here. Okay. Let's see. Okay, so immediately 10 a.m. candle opens, we trade into this gap. And as you can see, let me delete this. I think we have SMT here somewhere. Yeah, we do have SMT. Why do we have SMT? Because look on this 1 minute time frame, you see this 257 candle, right? We broke below that candle. Okay, on ES 257. This 257 candle, we didn't even come close to breaking below. So that's bullish SMT internally on the 1 minute time frame. Right? So since we have the SMT, we traded into this 15-minute gap. What do we look for? We look for, well, actually, I think we're going to make a new low. Nope, we don't make a new low. Or do we? Okay, make a new low. So change in state is above this candle right here. New low again. Change in state is a break above this candle now. Why? Because this is the candle that swept this sell side liquidity. Okay. Let's see. New lows. And then we go ahead and have this huge weird candle. Okay, this was a bad example because the SMT got mitigated. Let me see. Maybe not. Let's go to the 15-minute. Nope, there's still SMT externally. Why? Because I'm not here. This candle, right? ES made a lower low, while NQ didn't break this low. You see that? So ES broke this low, NQ didn't. Okay? So as you can see, this was bad PA because we literally mitigated this 15-minute gap and then got the trade to the upside. I was still bullish though because we were trading out of that 4-hour gap. So I still anticipated price to make a low and then trade higher, which is what it did. But you see how important SMT is, and that's the whole point of this video. And hopefully by now, you have a good understanding of SMT and what it is and why it's so powerful. So just to recap, okay, SMT, let me write this down. SMT at highs, right, that is bearish SMT. SMT at lows is bullish SMT, right? And then we have internal SMT, which is lower time frame SMT, and then external SMT, which is higher time frame SMT. And we also have, right, basics. 15-minute PD rate is a 1-minute execution. So 1-minute SMT or 15-minute SMT. I'm actually going to delete that. Okay, and then an hourly PD rate is a 5-minute execution. So this should give you guys a good example of SMT. I mean, this is like a real backtesting session. So hopefully by now you completely understand SMT. I hope this video helped. If you want to watch more videos just like this, I'm going to be posting a lot going forward. And I also have tons of this type of content on my YouTube channel as well. So you can go check that out. Feel free to subscribe, like the video, and then go ahead and leave me a comment. Let me know if you learned anything from this. Let me know what type of videos you want to see going forward. Just let me know. If you want to tell me about your day, tell me about your day as well. You can also follow my socials using the links in my YouTube bio. I have all of my socials there, so you can go check it out. Check them out. Go ahead and follow me if you don't, if you want, whatever. But yeah, this was the video. Have a great day. subscribe. Peace out.